Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, Happy New Year, everybody. I definitely took a few days off for Christmas. Of course, the Pro channel, we're still pumping through it and doing the best we can through these through the end of the year here. But it's been a little while, so I hope everyone's had a great Christmas season and all of that. And I hope you're gearing up for a brand new 2023. At this point, we could use a nice fresh start. So that is what we are looking for. Well, I'm going to do a couple of changes to the chart that we've been watching and looking at for a while. So let me first of all remove some lines. This trend worked for a while. We fell out, and so I'm going to go ahead and move it. It may be relevant again at some point in the future, but I've got too much stuff going on my chart, so I'm just going to leave that out. The only questionable line that might make sense is these two connecting here. So this actually could be, it might be that we are falling out of a trend here, or perhaps this is the bottom of our trend and we're just getting squeezed between these things. I'm just going to put it on this candle here, and we'll just see what close ends up doing. But this would be the tightest line, excluding today. So anyway, we're definitely in kind of a pinch zone, and so that's kind of interesting thing. The tops of these candles are coming down through here. This might move to the top of this green candle here, but either way, we're really our downward pressure and our upward support are both meeting very soon. Like today and tomorrow are kind of like these moments where we're going to kind of figure out what we're going to do. So it's possible if we go sideways, we could break through both of them, which would be interesting. But normally it'll make a decision. So we'll probably head up or down from here. But yeah, things have been very quiet, very, very, very quiet. The Christmas holiday. Look at these candles, just absolutely silent. And just when markets woke up a little bit, we've moved a little bit. The major news that has happened since we've had our last video is that we did touch the 50. In fact, we touched it so close that our 50 is sitting here at 16,920 and 50 cents. Our close was 16,918 and 70 cents. Less than $2 difference between close and the 50. And then we immediately rejected yesterday. And today we have a wick that didn't quite reach the 50. But when we are rejecting from the 50, from our most recent rejection on the 15th, let's see, I guess technically this would be the day that it rejected. So the 27th versus the 15th, it's a 12-day difference. When we start touching a support or resistance and start doing it more frequently, that's when you have a recipe for a break. So I think there's a lot of evidence and a lot of, I think that we've got one of our best chances of breaking out of the red zone and moving into a different situation. I love the sideways consolidation that we've seen, and we're starting to put in enough time that our FTX drop is becoming less and less relevant. It's now the structure from here that's making a difference. And crossing this downward resistance will help make that decision. So just so you can see, if I put my my cursor right on the 50, you can see that day 50 is this close here. So tomorrow, this candle will be replaced by today's, and our 50-day moving average is now going to exclude anything before the FTX drop, which means our 50 is going to start flattening out big time. We are about there. Our 50 today is at 16,804, and we will likely be just barely under 16,800 in tomorrow's candle. So if that's where our 50 is and it's flattening out, heading sideways, we are finally in a good zone. I think the last time we really started flattening out, I mean the 50 started dropping here, and then it was kind of impacted by some things. But right here, the 50 pretty much flattened out. And then it took us till here before the 100 flattened out. And so when both the 50 and the 100 are pretty flat, that's where they got so close they in fact crossed for a few days. And then 100 still flat, 50 flattened out a second time after recovering from this downturn here. And we were just parallel for like weeks. And this was a recipe to move. And had we not had the FTX explosion, our market would be in a different place. But that's okay. If we repeat the same pattern, our risk-reward profile is even better. And the structure and the market sentiment and all of that is still in play. So we continue dropping and we find our base. And now here we are again. We are at the 50-day flattening out. So we're essentially entering this sort of a zone where the 50 is starting to flatten out. We're rejecting more. This is probably our data point where we've rejected pretty hard the first time. And then let me just see how many days that is. Yeah, 21 days. So it's not 12 days, but it's close. So rather than 2 weeks, it's 3 weeks. We're doing kind of a thinner version of this, which is even better because if you're touching it even more frequently, that's even more positive. And so we hit it here, and then we reject it a little bit, and then we hit it again, and we're hitting it again and again and again because the 50's flat, and we're going sideways. And then the 100 flattens. Well, the 100 will completely flatten once it's, let's see, yeah. So the 100 will stop including the pre-FTX drop in about 49 days. So after 49 days, it will have dropped as far as it's going to be, and it'll be down in 17 or 18,000 land if we were to go sideways, obviously. But what's more than likely to happen is that the 50 will start flattening. The 100 will just kind of slowly creep down little by little, but it's less steep than when we were including these major drops. And so we're going to start doing something a little similar to this. So this range here is really good because if we do this again down here, our chances of having a move out of the bottom of the bear market is better than ever. So this is pretty cool. So now what do we expect? And this is the point of this video. I kind of wanted to talk about rejections from the 50. And so what is typical? What could we expect now that we've had sort of a second rejection? This was an obvious rejection. And then this one is a start of a rejection. And so what kind of downside could we expect coming off of this? Let's look at some experiences in the past. I'm going to head over to, I pulled a fresh chart. I just used Binance USDT because I haven't used it for any of my analyses or anything. And so it'll give me a fresh chance, a fresh chart that I can draw all over and make it all kinds of messy. So if I take, so what I'm doing in the parameters of this analysis is I'm saying, when was the last time we touched the 50, and what was the lowest point we traded after we touched the 50, and it resets if we touch the 50 again. So in other words, here we left the 50 for the last time here, and I'm putting my starting point at the 50. and then I'm taking it down to the lowest point, which happened to be 4 days later. This was a drop of 8.5% in total. And then once we hit the 50 again, we reset. So now here's, we wait, but I'm not going to set it until I see that we've missed the 50. So we didn't touch the 50 here. So technically our rejection starts here. So I'll just draw in, so at 16,842, 16,842, and I'm kind of just getting it as close as I can. So I'll take it from there. We are currently trading at a 1.45% discount from this rejection. So what's typical, what's normal, we're going to look and see. Our low for the day puts us at negative 1.67. Okay, so after we have an actual rejection, so I'm going to zoom out and we're going to look at all kinds of data points. Ever since, so this is Binance, so this is as much data as I could get. This is the 2017 high. So after a massive run up, what do rejections look like off the 50 after we hit an all-time high? Well, our first one was a drop. After the last time we touched the 50, we hit a low of a 58% drop. Major drop from an all-time high. Then we came up and tagged the 50 and dropped 17%. And then we kind of flattened out a little bit and had a tiny little drop. It only took a day or two and it went down about 17, 18%. Then we came up and had a 35% drop from there. So you can see that we had a major drop and then we had a couple of smaller ones, but these were still pretty sizable. So there's a lot of volatility still happening. And then we had a big rejection, 35%. So this 35% is still higher than our low here. So that's interesting. But, we're taking this from the 50. So where, how do we interact with the 50? And then we had a little bit of this is sort of our bull trap. And then we came back down. We left the 50. Actually, there's a tiny little one where we left the 50 for a day, for one candle. And went down 4.6%. And then we had another major one, so 31%. So our major ones, 58, 35, 30, 31. Hopefully, we're getting through it. And then we had our range is getting tighter and tighter and tighter, and our volatility is dropping. And we went 15, 13, 2.5, 6.5, and 4%. So they're going from wider, so 31%, and then a couple of 13 to 15s, and then we have single digits averaging at about 4 or 5%, a couple of them. And then we had one final capitulation drop and we completely rejected 51%. And then this is the bottom of the bear market for 2018-19. And there were 3 small rejections. So once we finally, we gave ourselves enough time that the 50 came down and started leveling off. This was the first time it leveled off from our original drop. And we had this little, it was a 9% rejection. And then we came up and tagged it again for 6.7%. And then we came back up, tagged it again at an 8%. So we had 9, 6, 8. And then we finally touched it again and we held on to it. And then we had a preliminary run. And this is what I'm expecting. I'm thinking that once we get the right structure, the market will go up too early and too fast. This is exactly what I'm expecting, because there's a lot more eyes on the market, and when the right structure is in place, it's probably going to be unstoppable, and people will FOMO in and it'll be wild. So now we've got a little bit of information in our minds, and so if we have sort of a major bull market, we're back into a green zone. We would expect a lot of volatility if we learned anything from our last bull market that we looked at. Well, there was a little bit. So we had 8.8%, we had a 10%, we had an 11%, 13%, 5%. So this was actually fairly concise. I think the market wasn't quite sure if we were going down, and so the market was Didn't know if it was oversold or not because we'd never experienced this before. And so these rejections were actually pretty tame, about 5 to 10 to 15%, and we had quite a few of them. So we were all over the 50 until our final rejection, and we dropped 30%. Then we finally came up and tagged it again. Then we had another drop, 24%. So from 30 to 24, and then 8. Then we were ready to go because our rejections were getting smaller and smaller, and finally we climbed above, and we were good to go, all the way up until the COVID crash. So this one sort of took everyone by surprise. This is probably more of a black swan than the FTX one. The only difference being that everyone had a lot of information that the market was turning down. We were below the 20, we were below the 50, we were below the 100. Like we had a lot of things, or the 200, I mean. We had a lot of information. We had like kind of 3 weeks to prepare for this. And so when it finally did happen, the smart people were already looking, they were already out. And then the rest of the people got in. So the reason the FTX was a little more of a black swan was that there was no warning. It was like two days of down, and then it just dropped out of nowhere. But it also wasn't this severe. Anyway, 58%, 59%, pretty massive drop. We had a bounce, and then we had 12% down, and then we kind of had a period of stabilization, 6%, 3%, and then we hit green zone again. So we were up in the green zone, and we had one final rejection for 11%, and then we finally, so I didn't count this one because it didn't touch the 50. There's a gap here. We didn't touch it until we finally broke it, and that's when we took off. So this is why I get excited about getting above the 50, is that oftentimes when we interact with it and we finally get above it, we're taking off. The rejections can happen, but there's usually a handful, and then we're out. So anyway, that's some of where my background in analyzing these charts comes from. So we get to the top of the 2021 bull run, and the first time we left the 50 for a rejection, we had a 17%. This was pretty tame. In the past, the first one was the big one. But if we get a small one to kind of give us a little bit of a taste that, hey, markets are changing sentiment, things are different. You know, we climbed up above the 50 for a little bit, but once finally we had a full rejection, it was 49%. So from top to bottom was 49%. And then we had kind of a month of kind of a slowdown, but we didn't overcome our selling climax here. Then we went in for our double top, so we moved up out of the red zone, and when we finally rejected off of the 50, we had one candle rejection, and it was 15%. So 17%, and then 49, and then 15%, and then straight into 45. So this one didn't waste any time. There was once we lost the 50, we lost it. There was no little bounce or any preparation before that. So 45. So there's some things to learn there. And then we went to this sideways consolidation. And because we didn't have a blow off top, there were a lot of us, me included, that was like, I don't know, it's hard to read whether we're going to go in for a triple and then break. So like, but big cup and handle or something, or not. But either way, we had several rejections from the 50 in a row, and then we kind of had a bull trap here. So this one was 17%. This one was 7.7, so about 8%, and then almost 6%. But you can see how they're getting smaller. The smaller the rejections, the more we're ready to do something, and usually it's to the upside. Just so happened that we rejected off the 200, and then we were back down. We did get an 8% rejection before we left it for this final capitulation, and this was 58%. So if I'm zooming out, the biggest ones was the original drop. This one was 58%. Final capitulation was 51%, and then the COVID crash was 58%. So we've had a couple of these big candles. And then in the more recent time, 50% was our original rejection. And in this case, because of our double top, we had two original rejections. 45 was next. And then I was calling this the final capitulation because we went down 58%, and it made a lot of sense that this would put in our cycle low. And now we go to our more current day. So we did recapture the 50 for a little bit, and then slipped below it and had a candle that did not touch the 50. This was a 6.7% drop here. And then we climbed up above, and then finally when we dropped again, we rejected for 16%. Then we had a 17%, and then we had a couple of tight ones. And this is the pattern that I think we're following. Since we've had a little bit larger, a couple larger ones, and then we've got 9%, almost 4%, and then 5%. So we were getting, we were touching the 50 more frequently, and we were rejecting smaller and smaller, and then we were ready to go. And I think this is what's happening. This FTX drop was 21%, so it was bigger, but it wasn't insane. This 16 and 17, they were pretty significant. It's just they just happened after the big drop, so they were a little bit more, I guess they weren't as unusual. If we're having kind of a strange over 20%, that's kind of interesting. But what are we looking for? We are looking for our rejections off of the 50 to get smaller and smaller and smaller. Because eventually, if they get smaller and we touch the 50 more frequently and we get tighter and tighter, eventually we're going to get above it, and then we're going to start some kind of a run. Okay, that was really convenient to have in the middle of my video. But yeah, so that's what I'm saying. I'm looking for our rejections from the 50 to get less intense but more frequent. And I think that's what we are doing. Our original drop was, let's see, about 50 days ago. And now we've had one 12 days ago. And we've just barely had one where we didn't touch today. So this could be the new rejection. And they seem to be getting less intense, and they are becoming more frequent. So I have a lot of high expectations that we are getting very close. And if we do get above the 50, there's a very good chance that our risk-reward ratio is better than ever, and that we continue to move. Could there be more downside here? Almost positively. Anytime we've really rejected and had a full candle of distance between a top and a bottom, I don't think our lowest candle was less than 3%. I don't know if we had a 2% drop or not. If so, it was very unusual. So any rejection from the 50 is going to probably be about a 4 to 6% drop. Let's just see where that would put us, and then emotionally we can be ready for whatever the bottom wick might look like. 3.5% drop would put us at 16,251. So that would put us, that would be very ugly because we'd be at the very bottom of our wick here. And depending on where the candle body closed, if we hit it fast and move back up, then there'd be really nothing wrong with that. But this could happen. Like we're looking at intraday action, like the all-time low after the rejection. So we could reject all the way down to 16,251. So that's a possibility. If we were to do slightly larger and we went to like 6%, if we had a wick down to like 15,800, that is possible. So anyway, these would be pretty tame as far as rejections go. If we were to reject the same distance from our last one, 8.53, 8.53 gets us about 15,400. That would be a new all-time low for this cycle. So I'm not expecting that, but I am expecting something in the 3 to 6 range. So if we had a smaller one, because if we are really getting smaller and consolidating, 3% would not would not blow my mind. So I'm expecting that we'll still stay above 16,000, and we'll probably kind of hover here for a couple of days. I'm betting we retouch the 50 very, very quickly. I don't think we're going to get too far away from it, and retest it in the next few days. So I'm looking at this week really could be it. And honestly, if we did start the new year on the right side of the 50, that would set us up for an unbelievably good 2023. So anyway, that's kind of my thoughts and analysis looking at us rejecting off of the 50. The markets, looks like the S&P is having a little bit of a rougher day. And so Bitcoin's just sort of following that sentiment. But I kind of feel like we're getting closer. I think we're doing okay. The sideways consolidation is looking really good, and we're getting further and further away from the FTX drop. And as soon as this drop is in our rear view mirror, we're going to start looking at, people will start thinking, Bitcoin's been around 16, 17 for long enough. And if it jumps up to 17 or 18 or something, people will be like, oh, hey, things are moving. And I think that can easily get the train started. So anyway, I hope everyone enjoys their day. We'll probably catch you tomorrow, and I hope everyone has an awesome new year. We'll see how everything goes over the next couple of days. All right. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.